From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, Buy S&P, Sell Crude. The high of the day in the S&P came in at 201220 early in the day. The low came in at 1975 even mid-morning, and last were 1986.40. We're down 4 handles. Total volume, we've got 2.6 million minis, but I want to point something out. 360,000 of that came from GLOBEX pre-open, and 1 million of that came from the mini S&P spread. So when you take that down, even though we had a big move down and a lot of chop back and forth today, we're not seeing all that much volume. And I'll tell you what, that occurs quite often during a rollover. And then we had 1,000 big S&Ps traded in the pit. MOC, it ranged from selling 70 million to selling 140 million. The MIM was showing like sell 275 million. Excuse me. You know, the S&P has been down 6 in a row. We haven't seen this in so long. I don't even know where the stats are on this. But that said, tomorrow starts out the first day of the Fed's 2-day meeting. We have the housing starts number, we have the Redbook number, we have the PMI Manufacturing Index Flash, we have a 4-week T-bill auction. Not that that matters very much. Look at the ES rallied overnight, and it used up all its buying pressure pre-open. After the initial push back up toward the GLOBEX highs, it never quite even made it there. The S&P went into, started to lose premium, and then as soon as crude oil started to downtick, the S&P went for a ride, or for the ride. But at the end of the day, what happened late in the day was that crude started dipping down toward $55, and the S&P started going bid. Now, what I think is that there's going to be a little detachment of this trade that we've been seeing over the last several days. And the reasons being is that you have one, and most important I think, is that the S&P is extremely oversold short term. And two, you've got very strong statistical and seasonal statistics going into the DEAS expiration and into the Christmas holiday. And then last but not least, the big thing here is the second day of the Fed meeting. It's all going to hinge on that. If all bets will be off if the Fed comes in and does some kind of change to their language, indicating that they're thinking of raising rates sooner than expected. I think what would happen then is you'll get a quick jolt to the downside. But again, I really do get this feeling that after the S&P being down 6 days in a row, that we're due for some type of bounce. And we were seeing that today in some of the price action in the S&P. We'll leave it like that, and we'll see you tomorrow on the opening print.